Hey everyone, it's Wednesday morning, December 18th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, and let's talk about what exactly was moving the markets yesterday. Before we get started, a quick note, today's episode is sponsored by AMF Capital, Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, the Dow just made a bit of unwanted history yesterday. It logged its 9th straight day of losses, the longest streak since 1978. Yep, you heard that right. The Dow ended down about 0.6%, while the Standard & Poor's 500 dropped 0.4%, and the Nasdaq, which hit a record high on Monday, slipped about 0.3%. Now, why all the gloom? Well, Fed policymakers kicked off their final meeting of the year, and Wall Street is almost certain we'll see a 25 basis point rate cut announced today. But here's the catch. Some experts are starting to wonder if this might be the last cut for a while. Inflation is still sticky, and everyone's waiting for clues on what the Fed's next move might be, especially heading into January. Meanwhile, retail sales data for November came in hotter than expected, rising 0.7% compared to the 0.6% forecast. Looks like consumers are still swiping those cards thanks to strong holiday spending. That's good news for the economy, but it also raises some questions about whether the Fed will feel the pressure to hold off on further cuts. On the corporate front, Nvidia stayed in the spotlight, but not in a good way. The chipmaker's stock fell over 1% yesterday, dragging it more than 10% off its November highs. Seems like the AI-driven hype train is taking a breather, for now. And finally, let's talk Bitcoin. Prices briefly soared above $108,000 before pulling back to settle just above $106,500. The crypto rally keeps powering along, and investors are watching closely to see if it can hold these new highs. That's all for your Capital Markets Quickie this morning. Thanks for tuning in, and don't forget to hit subscribe so you're always up to date. I'll catch you back here tomorrow with more market moves and headlines. Have a great day.